Excellent. I want to welcome everybody to Off Market Insiders. My name is Scott Lundgren. I'll be your presenter here today. Today we're going to be discussing how you can learn to create wealth like the top 1%. If you ask some real basic questions, it really makes it easy to understand what is different with the top 1% versus where you are at right now. In fact, if I were to give anybody an assignment, I would say get out a piece of paper and sit down and write down what you think is different. What do you think is different about the 1% versus you today? How do they create income versus the average person? What do you think you could change in your life to become more like the top 1%? Right now, about 76% of Americans admit that money is the most significant source of stress in their lives. It's the vast majority of Americans today. Following up on that, 1% are independently wealthy. That's the people that we want to emulate. But another 4% say that they're comfortable at 65. But everybody else, so 95% of people out there at age 65 can't really retire. They're either dead, dependent, or still working. I read recently that Social Security is going to be out of money by 2035. So there's a lot of questions that this raises. How come 95% of Americans are failing? Are not able to create the wealth of the retirement that they're looking for? And the answers, I think, are pretty glaringly obvious because the vast majority of people do the same thing. We want to help you create a different story. Our story down here at Off Market Insiders is very simple. We got into the investment game collectively between everybody down here, maybe, over 30 years of collective experience in the investment world. And what we have found as we've gone through this is that not only as we go out there and create tens of millions of dollars of assets for ourselves, but as we help our clients go out there and acquire millions of dollars of assets for them too, we find that most of the hurdles, most of the objections or the obstacles that people face are the same. And so typically, up until now, we've been working with individuals or investors that have been through a process, meaning they've spent or invested money into training and education, and they've been going through courses and learning. And eventually, when they get to a certain level, we present to them investment opportunities that they can get involved in. And with that core basic knowledge and understanding, it helps them get to where they want to be. And what we have found, though, as we've gone through this, is that for just pretty much everybody out there, the general public, it doesn't matter if you've gone through that educational process or not. If you want to create wealth, there's only just a few things that you have to really dramatically change. Everything else can stay very much the same. And if you do that, though, it can make a massive difference in what you do for your life, and more importantly, what you can do for future generations as well. So what we want to do is we want to talk about success principles. And what we feel like, and this is a phrase we often use down here, is that success is predicated upon correct principles and strategies. And when you know them and you apply them effectively, you can create success just like anybody else. First of all, do you believe that? And as you hear that phrase, what it's saying is, if you know everything the wealthy guy knows, and you're not wealthy yet, if you apply it just like he did, will you become wealthy too? And I think the answer is almost unequivocally yes to everybody. And I really believe that, because we've taken people that never felt like they could do it on their own and helped them get there. We've taken people that were close, that were just missing just a couple little minor things and got them over the hump to get them to where they want to be. And it doesn't matter where you're at in the food chain or the knowledge base or the experience. What matters is that you have a desire. You have a desire to go out there and change your future, and you don't want to be a sheep. You don't want to be like most Americans and not just sit there and enjoy the rat race. We want to help you. Our goal is to help you become an off-market insider. Okay. Once you become an insider, we're going to help you create wealth outside of the stock market. We're going to create consistent positive returns using safe, secure assets. So what do we mean by off-market? Why do we use that term? It's something you're going to hear from us constantly, so it's good to define that here in the beginning. What we mean is just not stock market based. Some investments that you can't normally find just by going out through traditional methods. A traditional method would be jump on Google, jump online and type in, wealth creating assets or, something, and you'll get a list of stuff. But usually that list is stocks or bonds or CDs or things that you can just walk down to your bank or, walk down to your broker and get, and anybody can get without really any major steps or access. We want to also show you how you can take advantage of opportunities that normally on your own you could never take advantage of. There are things that we refer to as syndication or crowdfunding, and there's a lot of different names for it out there today, but it all means the same thing. It means that, we're going to collectively get a group of individuals to invest into an opportunity where you could never do that on your own because of capital restrictions or maybe some other restriction. So, for example, if we have a $50 million project and we need to come up with $10 or $20 million to get that project up and off the ground, most people don't have $10 to $20 million just laying around. But you may have $10,000 or $50,000 or $100,000 that you'd like to put towards that type of an opportunity, and we can get other like-minded individuals just like you, and all of a sudden that opportunity becomes a reality for everybody. We already have wealth creation processes that we've vetted out, meaning we have spent millions of dollars and countless man hours creating partnerships and relationships with good, viable companies. If you've been out on the internet looking for opportunities or trying to research to find a company that you could work with, you've probably found that there's a lot out there. In fact, there's so much available on the internet. It's hard to know what's good and what's bad and what's real and what's not. So if you can join a team like our team that we've created here, if you can become an insider, you don't have to worry about vetting out individuals or companies. We do. And you can save that time, save that energy to go focus on creating more wealth. I want to cover some questions about creating wealth that often come up when we talk to our clients. And these questions are, I'm sure, very obvious. Will buy and hold in the stock market create wealth? It's a good question. Why can't you use insider information in the stock market world? As we know from the Martha Stewart stories that are out there, you can't use insider information with your investing. But when you get outside of the stock market, it's actually encouraged. The more insider information you can get, the better for you making your decisions. So why can't you use insider information in the stock market? What do the 1% do differently with their time? What kind of financial vehicles, do I need to build wealth? How can I gain access, as the 1% have? So all these questions are things that we want to answer as we go through this here today. And I want to start with the stock market. As you guys know, if you are heavily invested into the stock market, as most people are in our country today, because typical work environments have 401ks or IRAs or programs where you can invest into some sort of a retirement option, they're all stock market based. They all have some sort of tie to the market. So the vast majority of Americans here today are heavily invested in the market. Do you think that there's maybe a correlation between the stat that I threw out earlier that 95% of people at 65 can't retire, and that's where probably the same amount of money is tied up as the market, right? So let's look at the last 100 years in the market. This is a map or a spreadsheet, or if you will, of the last 100 years in the stock market. And you can see that the crash of 29 that we all remember created the Great Depression in the 20s and 30s. When it happened, it took an entire decade, 30 years to recover. So if you wanted to retire in 1930 or 1931 or 1940, you couldn't, right? Because your money had been depleted. So you had to continue to work. You had to continue to let that money rebound, and it would take 30 years. Well, if you're at retirement age, if you're at your late 50s, your early 60s, or whenever you decide to retire at 1928 or 1929, you can't retire. You got to keep working. And you might say, Scott, that's an isolated incident, but it's not. Look at this. It happened again. It happened another 30-year gap before the market recovered after a big crash. And it happened again in the early 2000s. It took only 15 years to recover that time. But, that's a long time. What if in 1998 you wanted to retire and your money had been plummeted, so you can't retire? you got to wait 14 years. So you got to wait another half a generation before you. I mean, and this is a trend that happens again and again, and it happens on a smaller scale. This is a snapshot of the last 20-15 years. So in 2000, what happened? Crash. Took a little while to recover. 2008, what happens? Crash. Right? So this is a pattern that has happened over and over again. And if you look real closely here, from 2009 until today, we've been on an amazing bull run. It's just been, anybody that has their money in the market has just been enjoying some great results over the last 10 years or so. And if you look at the average, this is by the way, one of the best bull runs we've had in the last 100 years. So you could go back 3 generations and nobody's seen a bull run like they have in the last 10 years. On average, I saw the other day that a portfolio return for most individuals that are in the market today is between 3 and 7%. Think about that. Okay, there's some years in there that probably show on a single year double-digit returns, and people see those numbers and they think, "Oh man, I'm getting that." But that's an isolated year or an isolated situation. If you look at actual portfolio returns for most individuals, it's 3 to 7%. So Warren Buffett was asked about this. Was asked about what he believes in, what creates wealth in his opinion, and he has a great statement, and I'd like you guys to listen to it. This is just a few minutes. I want to play this video for you. I want to talk about it a little bit after it's over.
Listening to you talk, though, Warren, when you say, with your comments about bonds, that makes me think of financial assets in general, which includes stocks. And I think about the printing presses, not only in this country, but around the world. You've seen the commercial, cha-chung, 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 with the central banks. And there are periods where financial assets are great, from the early 80s to 2000. And I just wonder if there's then periods where hard assets are great. And you see Paulson in gold and some of these other guys in gold or commodities. Are you just not comfortable with commodities? Are there times where you should be downplaying maybe stocks or businesses and going totally full bore into commodities, but you're just not comfortable doing that?
No, the alternative with me, Joe, the alternative, I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But the alternative, in my view, I mean, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type investments. And so I've said consistently for the last few years, I would vastly prefer to own common stocks than fixed dollar investments over a 5 or 10 year period. I don't know about the next 5 hours or 5 days. And that might very well extend to rental real estate. It might extend to farms. I mean, an investment, you're looking for something where you put out money now and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's 2 types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are 2 different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it.
So Warren Buffett has some statements in there that I want to bring to the surface. And one thing he says is I prefer income-producing assets. Now, we all know Warren Buffett, the Oracle of Omaha, runs Berkshire Hathaway, one of the sharpest financial minds in our country today. He talks about fixed dollar investments, like they're, he doesn't like them at all, obviously. And he talks about a lump of something, right? Well, stocks or most commodities, gold is another great example, is just like that. You buy it, you hold it, you hope and pray down the road it's worth more money, right? And in the meantime, doesn't matter how long you hold on to it, 1 year, 5 years, 10 years, 20 years, in the meantime, it does very little for you. So why income producing assets? Why does he talk about that? And we're going to get into that quite a bit as we go through this here today, because we believe in the same thing. We believe that income producing assets and real estate and commercial properties and other types of investments that produce income, storage units, there's lots of other things that are out there that do the same kind of thing. They're the types of things that we feel like are what the wealthy are using. And it's not just us. It's not just Warren Buffett. You can go look at hedge funds, large investment portfolios that are out there. They're buying up these same type of income producing assets right and left. I heard a stat the other day that there's over 400,000 homes in America today that are owned by institutional investors like hedge funds and Warren Buffett and the like. So if that's the case, then that's the first thing that you're going to need. And how you're going to get there is you need to get some inside information. I mentioned this a little bit earlier in our slides that we had in the beginning. And in the stock market world, insider information is illegal. If you know more than the average public, or you have information that gives you quote unquote a leg up, can't use it, right? You get in trouble. In the real estate world, or using other income producing assets or other options that we get you into, it's quite the opposite. We're going to encourage you to get all the information available. Now remember, we go out there and vet a lot of this for you, so we can provide most of this information easily. And we have a coined term here, we call it legal insider trading. We want to give you guys all the information that we can to give yourself the best possible chance of creating wealth. So I want to share with you a historical example of the wealthy that do it the right way, that continue to create wealth, and those that don't understand the same principles and strategies and don't create wealth. These two individuals created more wealth than anybody else, not just of their time frame, but actually in history. If you go back, hundreds and hundreds of years, these are some of the wealthiest people that literally have ever lived. Cornelius Vanderbilt built his money via railroads. He had over 100 million when he died in 1877. You translate that to today's dollars, that's over a couple $100 billion. Okay, he gave a little bit to a university that adopted his name, we now know as Vanderbilt. But the vast majority, over 100 million, and again, in today's dollars, over $200 billion, okay, he gave to his heirs. And he just like most inheritances, he, here you go, family, here you go, future generations, wish you luck. Because they had no structure, because they had no, education or training, and didn't know what to do with that, okay, 92 years later, so within 3 generations, they got together and they realized that not one of them had the millionaire status. Okay, so that's a lot of money. Okay, that's a massive amount of money that's gone. The opposite side of that story is the Rothschilds. The Rothschilds built their fortune via banking. They had a little bit more, but same concept. Okay, a lot of money for the time. But when he left the money to his heirs, he put some structure into place. Okay, so some principles, some strategies. Number one, the wealth was to be kept in a family bank. Okay? Nobody could withdraw from the money. No, you couldn't take any withdrawals. What you could do is you could loan against the money that was there. So the money would always stay there. It would always continue to compile interest and grow. But instead of, withdrawing, if you have the mentality of taking a loan from the money, then that changes what you do with it. You have to now get a return on that investment, and you have to be able to pay it back, right? So his future generations, instead of pulling the money and spending it and blowing it like the Vanderbilts, they invested their money with the intention of getting a ROI, a return on their investment. And because that mentality was completely opposite, what happened is their money grew to, some people think it's $100 trillion today. Okay, so that's a massive amount of money that continues to grow and grow and grow because they're following the strategies. They get together once a year and they review what's happening, what's working, what's not working. And because they have that structure in place, his future generations continue to create wealth. So you have to ask yourself, what is different? What do wealthy people do that's different? That is definitely part of it. The other thing is how they create income, right? Not just working hard. That's active income. Active income is working for your money, okay, where you're working a job, salaries, wages, commissions. Okay, even if you have a business, if you have to materially be present for that business to continue to create income for you, that's active income, right? In the real estate world, this would be actively flipping properties, wholesaling, fixing up, rehabbing. All of that is part of the active side where time is part of the equation. Okay. Passive income is where you put your money to work for you, like the Rothschilds. Okay, you don't go work for your money. You let your money work for you. Income that's received on a regular basis where little or more extra time is ever put in after you initially create your investment. Okay? Examples of this would be interest earnings, royalties, portfolio returns, or in the real estate world, this is referring to passive or done for you income properties. Okay? Not active ones, but passive ones. I'm a very visual guy, so when I am trying to wrap my head around a concept, seeing something visually helps me a lot. And this here, I hope, helps a lot of you listening today. This is an example of a typical week. Most people work 40 hours a week that are just working a typical job, right? So when you look at the amount of money that they're creating, they're working 25% of the time and they're getting paid 25% of the time. That means 75% of the week, they're not creating income. It's kind of hard to get ahead financially when 75% of the available hours that are out there are not doing anything for you. Even if you're a workaholic, I put a 60-hour work week on here, shows you it's not even half. We can move it up to 80 hours, okay? I mean, somebody's working 80 hours, by the way, they don't have a life, right? They sleep, they eat, and they work. I mean, there's just not a lot else if you're putting in 80-hour work weeks. And so the only way to get ahead, if you're thinking about it, logically, is let me get paid every hour of every day without having to put much time in, so I can go do that over and over and over and over again. And that's what passive income does. It pays you every hour of every day of every week. You only have to usually put in a very, very small minute amount of time to continue to let that passive income work for you. So we want to help you guys create that. And I think a lot of people are probably saying right now, Scott, I got it. I'm sold. I want to create wealth like the 1%, right? But how do I get started now is usually the question. What can I do in my life today to start changing and becoming like the 1%? And that's what we want to do today. We want to expose you to what we believe to be the best ways to create wealth in these changing times. And let's start with a simple financial vehicle, okay, that the wealthy have been using for years and years, over 160 years, without any losses during that time frame. Let's look at a simple thing as buying a vehicle. Most people go out there and they buy a vehicle, they get a loan, right? So you go out and you buy your car, and let's just say you put it on an 8-year note at 5%. So you loan, you pay it back. Well, once you pay it back, that car's pretty old. It's an 8-year-old car. What do we need to do? We need to go buy another one, right? So that happens again. So we go do it again and again. And so in this example, I'm using a cycle of buying 3 vehicles over the course of 24 years. If each vehicle costs $30,000, that means you spent about $90,000, and interest roughly was going to be about $20,000. So you spent $120,000, and at the end of that $120,000 spend, you got nothing. You got no wealth, got no money in the bank, you got an 8-year-old car, right? So not really a wealth generation thing. This is a spending thing. The saver is going to come to me and say, Scott, I'm so disciplined, I'm going to save my money, and I'm going to buy my car cash, and then I'm going to do that over and over. Well, once you buy your 3rd car cash, you're in the same boat. You have no wealth, right? You saved a little bit. You didn't spend an extra 20 that the spender did, but savers, spenders, you're not wealth creators. You're just finding different ways to buy stuff. A wealth creator is going to say, I want to invest my money in an asset that creates wealth for me the entire time that I'm buying these 3 vehicles. Now, they still go to get a loan, and they pay back the loan. But just like the Rothschilds, okay, they're paying themselves back. They're not paying some random bank or some random institution. They're loaning against their own asset, so that when you pay yourself back, that asset continues to grow. So in the background, the whole time that they're buying their 3 vehicles, they have an asset that's getting bigger and bigger and bigger. And over the course of that time frame, the simple numbers that we ran is you're going to have a little over $250,000, in this example, a little over $270,000 left. That's after you have the same vehicle. So the same exact scenario as the other individuals, but now you have wealth. Okay? If this is a real way of doing things, which it is, are you doing it today? Or can you currently buy a vehicle and create wealth during that time frame? If not, you need to become an insider. You need to let us show you how you can implement this one vehicle, this one financial vehicle into your strategy so you can continue to create wealth over and over and over again while you're just living your day-to-day life. This doesn't change anything about day-to-day. This is just implementing a strategy in your process. Think about this for a moment, you guys. If one strategy, which is buying vehicles over the course of 24 years, could create a $250,000 difference to your overall net worth, and you don't have to change anything about your day-to-day, do you think it stops with buying cars? Or do you think maybe you can apply it to your homes that you're purchasing throughout the years, your vacations that you're going on, if you have a business, you have a lot of in and out of the business, a lot of flow of money that is just for day-to-day, just to keep that business rolling. Do you think you could run that through a financial vehicle before you use it? The answer is yes. College funds, it doesn't matter what it is that you're looking to invest or, a consistent spend of money, what you're doing with it. If you run it through a financial vehicle first, it will dramatically change your life and it'll dramatically change your wealth status. And over the course of 30 years, a typical, 30-year work time frame, it could be the difference between having any money left or having hundreds of thousands, if not millions, left at the end. Okay? So why do we keep going back to off-market insiders and joining our membership? Well, what we have done for everybody that's out there is we've created all these processes, we've created all these relationships for ourselves, right? So that we could go out there and do our own investing. And what we realize is that there's a lot of value in these relationships and in the processes that we've created. So if we can help other people basically just replicate what has worked for us, it should work for you as well. So the first thing that you're going to get when you join the off-market insiders is a little guide just to teach you what is the steps to passive real estate investing, right? Now, we use real estate as an example because it is an income-producing asset, like Warren Buffett had mentioned. He bought the farm, right? He mentioned rental properties in that statement, but it doesn't matter what kind of income-producing asset it is. If you can create a passive real estate or passive asset-based income, okay, you're creating wealth like the 1%. And this guide is very detailed. It will help you understand the ins and outs of what it takes. We have the availability down here to provide to you what we call done-for-you real estate, meaning we do all the heavy lifting. Okay, there's a lot of things that goes into an investment property that's going to consistently perform well. And not everybody listening to this webinar here today knows all the steps or quite frankly has the time, energy, or ability to go through all the steps on their own. All right, so what we want to do is we want to provide to you investment assets, real estate properties, and these could be apartment complexes, storage units, could be single-family homes, syndications, crowdfunding. There's a lot of different options that we can get you into, but they're going to have property management services in place. So once the investment is rolling, you still have nothing to handle on the day-to-day. So why is done-for-you real estate attractive? Well, your immediate return of investment of 6 to 10% out of the gates. We're already outperforming the market. Remember earlier I showed you the slide of the market and what it's been doing, and even during our amazing bull run over the last 10 years, it's only been averaging 3 to 7% for most people. Okay, and this is an immediate return. Just buy it, just get it locked in, 6 to 10% out of the gates. Okay, you don't have to put time in. So just like the active versus passive income, once you get this rolling, once you get yourself involved in this process, we handle it from there. We take care of the tenant issues. We take care of, anything that might come up. You don't have to fix or repair it, all those kind of things, and we'll help you understand market. Let me give you an example of what I mean by market. I had a gentleman who called me up and he said, Scott, I love the idea of passive income. I love the idea of using real estate to accomplish that goal, but I can't utilize that strategy in my local market. I wanted to know more. So I said, great, help me understand what you mean by that. And he said, it was very simple. My medium home price here where I live, which happens to be San Francisco, California, is $1.2 to $1.5 million. I said, okay, well, that's a steep average price. And where we usually invest into our properties, it's about 1/10 of that. It's about 120 to 150,000. So I can get 10 homes where I usually invest versus the one home where you're at. And so I can see why you say that. But let's take that one step further. If we can rent that property out for enough money, it's still a good investment and you can still do it. So let's find out what the return is. And I know what I can rent mine for. If I had 10 single family homes in my markets that I encourage people to utilize, we're probably going to get roughly, I don't know, about $12,000, maybe $13,000 of monthly gross number. That's gross. That's total top line income. So I asked him, I said, what can you rent your property out for? What does a $1.2 to $1.5 million property go for these days? And in San Francisco, you can rent that property for about $3,600 a month. So 1/4 of the return. So obviously he's right. San Francisco, not a good market for cash flow. But there's usually two types of markets that you'll find when you go out there and you get into real estate investing. There is your, active market, and then there's your passive market. Cyclical market, linear market. There's a lot of different ways that people refer to this, but in your high appreciating markets, your San Franciscos, your LAs, your New Yorks, your Miamis, these properties usually appreciate in value quite a bit, right? So that's good if you're buying and flipping, because you can usually create a profit. Remember what Warren Buffett said about a lump sum, right? This is the lump sum part of real estate. If you buy a property, you're rehabbing it, you're fixing it up, and you're looking to sell it on the market later, you're hoping and praying somebody will pay more for it, right? When they do, you make some money, which is, in those type of markets, is good. But in the markets that we encourage you to get into, the reason why cash flow the cash flow is there is because the properties haven't done that appreciation. They haven't gone through that cycle. And because they haven't, they're still low price points. You can still buy a great performing single family home for 120 to 150 grand. Okay, that's an amazing opportunity. But what if you were to try and figure that out on your own and go through all the markets in the U.S.? Even when you found that market, all the steps that you'd have to take. You look at kind of a drill down here of what you need. You need to find the best markets in the U.S. You need to find the best neighborhoods within that market, because each market has A, B, C, D neighborhoods, right? So you want to make sure you're in those top tier type of neighborhoods. You need to find the best homes within that neighborhood. You need to find the best tenants for the homes and the best property management team to manage it all. And I could go on and on and on here, but you guys can see that there's a lot of heavy lifting that goes on behind the scenes to create a performing property. We already have all that dialed in. We already know exactly where to go and what to do to make that happen. And the reason that we're on the webinar here today is because we want to have that opportunity for just about everybody. Anybody that can pick up the phone, that can call in and say, Scott, I want to buy another property, or I want to buy another 5 or 10 properties. It doesn't matter what you're looking to purchase, right? You just call, you talk to us, we show you, here's the ones we've already vetted out. Here's the ones that we've already got ready to go for you. We can serve up on a silver platter for you. Okay. I want to go through a little bit more of a specific numbers example. Okay, let's say you come to me and you say, Scott, I got 100 grand. What can I do? All right. Well, the first thing is I'm going to teach you that leveraging is one of the key principles to creating wealth. And not just leveraging your money, like the example we're going to talk about here, but leveraging time and leveraging knowledge and leveraging anything you can in your life. When you create passive income, that's leveraging your time. When you're investing into real estate, you can leverage your money by taking $100,000. Unlike the stock market where you can just go buy $100,000 worth of stock, in real estate, you can take that, use it as a down payment, and get $500,000 worth of real estate. That's amazing. Leverage is one of the most amazing principles, and if you learn how to apply it effectively, you will create success. So we're going to take this $100,000, we're going to turn it into $500,000 worth of real estate. We're going to use the 100 as a down payment, and we're going to expect some equity growth on an annual basis, but the equity growth is speculation, right? Could be 2%, could be 4%. Last couple of years in our markets, we're actually closer to 6 to 8%. But the point being, we're going to use 4% for today's numbers, just as a speculative number. If that happens, you're going to increase the total value of $20,000. Now, remember, it's 4% of 500,000 because we're leveraging ourselves. We're increasing in value. We're actually creating a 20% first year return just off equity growth alone. We've already smashed the market. Okay, we've already gone well beyond what the market can do for you. And we haven't even rented out the property yet. Okay, if you can dramatically increase your returns, do it with a safe, secure asset that has very little or no downside compared to the market, and you haven't even rented out yet, does that sound like a good deal? Let's take it the next step and let's rent it out, right? So we take our $100,000, we get some equity return. Our net cash flow on that is going to be, about $12,000 of cash flow, just running the numbers. So we've got 32% return between equity and cash flow. We can add another 15% potential return off tax breaks because $400,000 of loan, remember buying 500, putting 100 down, so we got a $400,000 loan, we can write off $22,000 of interest every year. We can depreciate that same $500,000 at $14,000 a year. Plus we got expenses and costs we can write off. And I don't know your tax position. I don't know who I'm talking to exactly right now this moment, but I'm guessing that just about everybody listening could benefit from an additional $22,000, $14,000. I mean, we're talking $30,000, $40,000 of potential write-offs on an annual basis for the next 30 years, right? That's not a bad deal. If we can increase our income, increase our ROI, we can lower our tax liability. I mean, does this excite you? Are you starting to see the picture? And by the way, if we implement our financial assets in the right order, we can increase these numbers even better. So some of what we've done is our access to our preferred partners. We have, our investment vehicle. We have our turnkey properties, commercial properties, storage unit facilities, syndications, crowdfunding. I haven't even talked about asset protection, estate planning, CPA tax services yet at all. These are all things that you're going to need to successfully grow your portfolio to create the wealth that you're looking for. And you don't have to go out there and reinvent the wheel. We already have these things in place. Let's talk about tax savings real quick. Number one cost to any small business in America today is taxes. We all know this. There's no secret here. Typical tax rates right now for most people that are doing well with their income, they're up we'll just say, above $150,000, $170,000 a year. They're paying 35-40% tax. Average American is paying, I think the last thing that I read was 27% is the average rate that most people pay. So if you're paying 25, 30, 35% in tax, I'm here to tell you right now, that's not how it has to be. There are tax strategies that you can utilize that are effective, legal, moral, ethical, and they can dramatically lower your net effective tax rate. It's not uncommon that investors can see, in the teens as far as their returns instead of 30, 35%. Okay, what would that do to your bottom line? What will that do to your wealth creation over the years? Okay? And really, you don't want to spend a lot of time on taxes. You don't want to have to sit there and, involve yourself very deeply. The key is not you doing it yourself. Again, let's partner with a proper CPA. Let's partner with somebody who, a firm that knows what they're doing, that has experience, that lives and breathes taxes so that they can do everything that they can to help you lower yours. And that's another strategy that you're going to want to implement. Asset protection is the same thing. As you acquire assets, you're going to want to protect them, right? And this is for any real estate that you might own or any other assets that you might have. As you grow a portfolio, as that gets larger, you may want estate plans, you may want family trusts in place. All these things are things that you need to talk about. Now, they may not be today, right? Anybody listening right now might say, Scott, I don't have enough assets to worry about protecting them. That's okay. We don't have to do, a full-on complete asset protection program if it's not necessary right now. But it is something we want to talk about and we want to plan for. So as your assets grow, as you get larger, as your portfolio increases and there's more need for protection, you know what you need to do. We have the partners in place and you can make it happen. Okay? So what about investment opportunities, right? We bring them to the table. We'll tell you on a consistent basis, here's a investment opportunity that is an individual investment opportunity, maybe buying one single family home would be an example, right? Or maybe here's an investment opportunity that is a syndication or a crowdfund where we need 20 or 50 or 100 people to jump in together in order to get this done, right? Maybe you just want to lend money. Maybe you say, Scott, this all sounds great and fine, and it sounds like you guys got a great thing going on here, and I want to be a part of it, but I don't really want to do any of this. I want to just lend my money out and get a nice conservative, return without having to worry. Well, if that's the case, we can put your money to work for you. All these other projects and situations that we have going on, they all require capital funding. So if that's the case and you just want to be a banker, great, let us know, and we can teach you how you can make that happen within our system. We're going to provide newsletters on a monthly basis. These are just, like any newsletter, access to new articles or tips or hints or resources that we've found that we want to share with our clients. We are going to provide for anybody that joins Insiders, off-market Insiders today, we are going to provide an LLC and a toolkit. It is vital that you have some sort of legal protection and some sort of platform to be able to help you lower your tax rate, and an LLC is one of the easiest, quickest, fastest ways to make that happen. But we need to do it the right way. We want to set this up properly. So we're going to get an attorney involved. He's going to set it up. You're going to talk with him. He's going to help you create articles of incorporation and operating agreements and LLC documents for this particular LLC that you create so that it's a full-fledged LLC that does everything you need it to do. There's a lot of discounted ways to go out there and get an LLC online these days, but I'm telling you guys, a discounted LLC that doesn't have an operating agreement, that doesn't have articles of incorporation, that hasn't been set up the way that it should be, really isn't doing what you think it is for you. I think an example I heard the other day is, let's have a bike race with Lance Armstrong. Who's going to win, right? Well, Lance Armstrong, right? Well, what if I put Lance Armstrong on a tricycle and I get to use his competition bike? I don't even have to be in shape. I'm going to beat him, right? So having the proper tool is vital. And if you don't have a good LLC, the right kind, one that's set up properly, you're missing out, and you need that tool. We're also going to create an initial consultation. I actually think the value of this is far beyond everything else that we're talking about here today, because that's really what most people need. They just need someone to sit down and dive in and help them create a plan. Remember what we talked about earlier. Success is not mystical or magical. It's based on principles and strategies. If you know them, you apply them, you'll create wealth. If we can have one of our consultants like myself sit down with you over the phone and just dive in, talk to you about what your goals are, where you're at financially today, what resources do you have, what do you need to fill in the gaps, and we sit down and we help create a plan of attack for you. If you can go out there and actively affect what we lay out, you will get there quicker, faster, easier. That I can promise. I think when you look at a total value of what we put together here, $10,000 is probably a low estimate. I actually think that the value of this is probably a lot higher than that, but we're offering it at a discount for $2,000 here today, or $1,995. As with most programs, we want to provide much more value than what you're actually paying for. This is an annual enrollment that you're going to be joining Off-Market Insiders. Every year we're going to provide to you, actually every month we're going to provide to you investment opportunities, consultations, everything that we listed out here. And $2,000, you guys, is a drop in the bucket. If you want to go out there and create true wealth, if you want to go out there and create the kind of wealth that you're thinking in your head right now, you have to have a platform. You have to have a foundation that you can grow upon. And becoming an off-market insider is an excellent platform to start from. All you have to do is go back to this little button that's below the video that you're watching right now. Click on Become an Insider Now. Okay? It'll enroll you into the program. It'll automatically generate to where we set up that initial consultation call to get everything else going for you. And I really do look for the opportunity to talk to as many of you on here as I possibly can to help you, to help put you in a position that other people have helped me get into and helped our team and the off-market insiders, because we haven't done it alone. We didn't create any of these processes ourselves. We learned them from other individuals that had created wealth before us. We implement them. They work for us. They're going to work for you too. You just need someone to sit down and guide you and direct you, and we look forward to that opportunity.